The tides have really turned in the crypto market when Blackrock becomes one of the biggest proponents of not only cryptocurrencies with Bitcoin ETFs, but also with blockchain as a technology they're going to use to issue securities. Last week, BlackRock issued the first tokenized fund, which I think is a massive first step for the blockchain actually being something that we utilize in finance on a regular basis. So everything from stock trades to bonds to ownership contracts of companies, these are all things that could be on the blockchain, tradable, verifiable. This has been the goal of decentralization, is taking some of the power out of the financial institutions that control it today and ensuring that the things that people own are actually verified on the blockchain. We could see this move to housing. We could see it move to all kinds of different assets. And the fact that BlackRock is interested in this, I think, is really telling for a number of reasons. One, it's a major financial institution. But two, this is the kind of financial institution that if you're a proponent of the blockchain, of cryptocurrencies, or an owner of Coinbase, this is the kind of company that you want on your side from a political and regulatory perspective. So I want to go through exactly what BlackRock recently announced, recently launched, how it ties into Coinbase, and what we should potentially look for in the future that can open up tons of revenue opportunities for Coinbase and other players in the crypto market. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's go to exactly what BlackRock announced first. This is the press release from BlackRock, and you can see that just the announcement here kind of goes over it. BlackRock launches the first tokenized fund, BUIDL, on the Ethereum network. So this is going to be a fund that the assets are going to be on Ethereum, not going to be quite as open as you might think, and potentially where things are moving in the future with something like decentralized finance. But again, the fact that BlackRock is involved in this is very telling. So what exactly is this fund? It's going to give investors the opportunity to earn dollar yield by subscribing to the fund through Securitized Markets LLC. This is not just for any investor. The fund's initial investment minimum is $5 million. So again, we are very early in the phase of these things actually being utilized and being publicly traded, but BlackRock is building this, is using Ethereum, and is testing this with high net worth individuals and institutions. And a few more things here. This enables customers. This enables the issuance and trading of ownership on the blockchain, expands investor access to on-chain offerings, provides instantaneous and transparent settlement, and this can also be traded 24 hours a day. This is a fund that seeks to offer a stable value of $1 per token. So this is effectively a stable coin that is going to generate a little bit of yield. So it's really no different than having a bank account that generates yield. You can get this from USDC as well if you hold your USDC on Coinbase. But what we're looking for is these major financial institutions like BlackRock starting to use the blockchain, starting to develop the capability to add more and more assets. And this is moving pretty quickly. It was only in November that Coinbase announced what they call Project Diamond, which is a smart contract powered platform for institutions to create, buy, and sell digitally native assets. Again, a lot of words. I think the way to really look at this is to think about bonds. How do we trade bonds today? Well, it's a very convoluted process. Most of these are not traded in the open market in the same way that a stock is. You're going to have to go to a broker and say, hey, can I get some Coinbase 2030 bonds? I'm looking to buy $500,000 worth. They're going to get you a quote. They're going to see if they can find a seller. This is why bond trading is so profitable for a lot of these major institutions. But the potential disruption is there from the blockchain because a lot of these assets could be simply listed on a blockchain the way that cryptocurrency tokens, the way that NFTs, which are actually tokens as well, are traded today. So that's what Project Diamond, I think, is moving towards. Leverages Coinbase's technology and the base blockchain to deliver secure, compliant capital market activity. So again, you start to talk about capital market activity, you're talking about everything from stocks to bonds, real estate, all kinds of different assets could potentially move there. And what they did in November was this was the first debt instrument on Project Diamond that was successfully issued, distributed, and matured on the platform. And this all happened very quickly, where they're basically just doing a very short test to issue a bond, distribute it to investors, and then mature it and theoretically pay out a little bit of a premium for those investors. That's the way a typical bond would work. And what this was doing was on-chain activity that mirrors the massive flow of debt instruments. Remember, debt is about a 10 times bigger market than the stock market is. So if you're a stock market investor, you think this is a really big market. You have companies worth trillions of dollars. Well, the debt market is much, much bigger. You have everything from governments, sovereign governments, local governments, school districts, companies, individuals, all kinds of people who are in debt markets. And so this is a much, much bigger market. And this provides potential operating efficiency and simplification in the financial process for issuing and maturing bonds. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Now, not only is BlackRock issuing this product, but Coinbase is also involved. So I think the tie you're seeing here is that Coinbase is becoming a blockchain service provider, whether those companies are using it as a custodian for assets, the way that a lot of companies are using Coinbase as the custodian for Bitcoin ETFs, or infrastructure provider on the blockchain with something like the Base blockchain or the Coinbase app, where they're actually the custodian of some of those assets. Potentially we have integration to the wallet, where now the custodian piece moves to the user or the owner of the wallet, not actually Coinbase itself. But again, Coinbase is becoming a services company in cryptocurrency. And I think that's ultimately what you want to see, is not only BlackRock using them, but all kinds of other major financial institutions. And then you bring in a user base of potential buyers that don't necessarily have to integrate with any specific financial institution because they're holding custody of their assets themselves. So this is the kind of disruption that I think could be really fascinating to watch over the next decade or so. This is one of the reasons that I'm so bullish on Coinbase. The stock has run up tremendously over the last 6 to 12 months. And a lot of that is because trading of cryptocurrencies is starting to improve on Coinbase's centralized exchange. But I think long-term, what you're going to want to look at with Coinbase is that this becomes an infrastructure company, a technology company. And these are the kind of deals that show that progress. And it's happening, I think, at a really rapid rate. In just a couple of months, we have seen major financial institutions actually issue a token to customers for a value of millions of dollars. Now, this is something that I think those of us who follow the industry have heard has been happening in the background for quite a while now. I was at NFT NYSE a couple of years ago, and I heard a lot of rumblings that a lot of these big financial institutions were trying to test out blockchains and cryptocurrencies and securitization of some assets with tokens, or tokenization of those assets. I think that makes a ton of sense long term. Could be a massive growth driver for a company like Coinbase, and actually lower the fees that a lot of customers are paying for these financial assets. So the promise of decentralization, at least in this case, could be working in financial markets. So something to keep an eye on, and we'll definitely be covering this on this channel because I think this is the kind of development that is going to be bullish for Coinbase. It's going to bring a lot of blockchain assets to the mainstream. So what do you think about the developments with BlackRock and Coinbase? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.